Hey everyone, welcome back to Corporate Dakota, the place where we sift through corporate paperwork so you don't have to. Today we're diving into the financial innards of Guggenheim Credit Income Fund 2019, and trust me, it's less exciting than a trip to the dentist, but way more important for your wallet. So let's find out if Guggenheim's magic trick of making money from credit is still working or if it's disappeared. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where we discuss these reports in detail. Alright, let's get into it. We're looking at their report for the quarter that ended in March of 2025. Something important to know right away is that they had about 1.7 million shares of common stock outstanding as of May 15, 2025, meaning that many people own a piece of this company. Now, let's get into the financial statements. These are like a health checkup for the company. This statement shows what the company owns, which is assets, and what it owes, which is liabilities as of a specific date, in this case March 31, 2025, and also comparing it to December 31, 2025. Their total assets were about $1.6 million at the end of March, which is less than the $1.9 million they had at the end of the previous year in December. That's a decrease, meaning they had less stuff at the end of this period. Total liabilities, which are what they owe, were about $122,000. A few months prior, at the end of December, they were only around $58,000. This increase means they owe more people and companies now than they did before. Net assets, which is essentially the company's worth after subtracting what it owes from what it owns, were about $1.5 million. This is also less than what they had at the end of December, which was $1.9 million. This decrease in net assets suggests that the company's overall financial health has declined in the recent months. Their net asset value per share, a key number for investors, fell from $1.07 to $0.85. This drop means that each share is worth less now than it was. Let's move on to the statements of operations. These show how much money the company made or lost over a period of time, in this case the 3 months ending in March, and comparing it to the same period the previous year. They had $0 in total investment income, the same as in the previous year. This means they didn't make any money from their investments during this period. Total expenses were $133,000, significantly higher than the $68,000 from last year. This jump in expenses means it cost them a lot more to run the business this time around. Their net investment loss is around $133,000. That's about twice as bad compared to the $68,000 from the previous year. This indicates that they lost more money than they made, especially after considering their expenses. Overall, the net decrease in net assets was about $382,000. This is a large loss compared to the $60,000 gain they had in the same period last year. This big swing suggests the company is really struggling financially. Their losses per share were $0.22 per share last year. This massive difference in the dollars of Dorand, Ensit, and REI, Etsa, AL. There are three share per share last year. This massive difference indicates a significant downturn in their profitability per share. Next up are the statements of changes in net assets. These statements track how the company's net assets changed over a period of time by looking at different factors like profits, losses, and shareholder activities. Starting at the end of December, the balance was around $1.9 million. After subtracting the net investment loss of $133,000 and accounting for a net change in unrealized depreciation from their investments of around $248,000, the balance at the end of March decreased to $1.5 million. This overall decline shows that their financial position weakened during these 3 months. Now let's look at the statements of cash flows. These statements show how much cash the company generated or used during a period, broken down into operating, investing, and financing activities. The net decrease in net assets was about $300 each, adjusting for a change of around $248,000. The net cash used in operating activities was $69,000. This indicates the company spent more cash than it brought in from its normal business activities. The cash at the end of the period around $354,000. This is less than the $423,000 they had at the beginning, which means they spent more cash than they made. Let's talk about related party agreements and transactions. These are deals or agreements the company has with people or companies that are closely connected to them, like executives, board members, or parent companies. These deals can sometimes raise questions about fairness, so it's good to know what they are. Guggenheim received around $16,000 for expenses. These agreements detail the financial interactions between the company and its related parties, ensuring you know where the money is going. A really important point, the Board of Trustees voted in favor of liquidating and dissolving the company, pending shareholder approval. This means they are planning to shut down the company and distribute the remaining assets to the shareholders. It's like the final act of a play. Lastly, there have been no significant events after the end of March that would change the overall picture. Now, looking at these numbers, it's clear Guggenheim Credit Income Fund 2019 is in a wind-down phase. The liquidation plan dominates everything, and the financials reflect that. The decrease in assets and net asset value combined with rising expenses and investment losses all point to a company that's not trying to grow but to close down in an orderly fashion. The distribution amounts are substantial, but it's important for investors to understand this is a return of capital, not profit. Alright, that's our breakdown of Guggenheim Credit Income Fund 2019's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.